Tesla stock is up over 40% year to date. And a lot of my students are asking me, is it still okay to buy Tesla stock? And how do I maximize my profits and make the most amount of money right now on Tesla stock using options? Even though Tesla stock is up a significant amount, I found a very big reason I think you need to pay attention to that is actually going to make Tesla rise more up to $400 per share in 2025, in my opinion. I just sat down and over a few hours of time researching Tesla, I redid my price target and I'm going to show you why I think Tesla is worth this much. I'm also going to show you a leap option and how to profit off of Tesla here in the next few months. Now, look, I know that some people don't have enough time. So if you want a 1-minute summary and you have to bounce out of this video, totally understand. You need to leave. Here's the 1-minute summary, okay? First, Tesla stock will go to $400 per share due to self-driving and having a bigger impact. Tesla stock will go up to $400 per share due to self-driving having a bigger impact than car sales themselves. Second thing I'm going to cover is Elon Musk will influence Trump and the White House as they develop their relationship. And I think there's going to be two really good freebies for Tesla. One of them is going to be regulatory favoritism. The other one is going to be trade and tariff negotiations that are going to help Tesla a lot. Now, three, the actual play I'm going to make in this video is going to be buying a leap option at 330 strike price. I'm going to personally put 5% of my money into this leap option play on Tesla. And the expiration will be for September 2025. So I'm going to go out till September 2025 and buy a leap option. And most likely, I'm also going to sell some calls to subsidize and make the leap cheaper. But nonetheless, I'm bullish, so I'm going to be buying the 330 call option. And I believe Tesla is going to go to 400. And the last one is, I just want to wrap up the little summary here. It's going to be pretty clear guidance for me personally that Tesla is going to have disproportionate returns here in the rest of 2024 and going into 2025. I think we'll see $400 per share in the first quarter or the second quarter of 2025. So there's my summary. If you don't have time, go ahead, go bounce and do your thing, and I'll see you guys later. But for the folks that have time, let's jump into the full explanation, right? So by the way, the portfolio is doing really well. We're at $4 million. So that's amazing. I'm going to open up Tesla right now and go to my position here on Tesla. And Tesla's currently trading at $342 per share. I do have 1,000 shares, which is about 8.5% of my portfolio. I have 1,000 shares at $218. This is a play that I put out in Discord. I'm currently up $125,000. And I have several different option plays. One that I recently opened up is actually a sell put position, but I'm actually going to open up a new leap play in this video. So you guys are really in store for some really good sauce here on how to make more money. Now, I first want to cover, before I go into like what I'm going to do, I want to tell you why I'm going to do it, because I think it's really important. You need to understand why I'm doing certain things so then you can be a better investor and make more money and reach retirement and hit the goals that you want to hit. All right. So here's the reasoning why. First of all, I'm looking at my notes here. Regulatory favoritism for EVs. Okay, that's the first reason I have that I think you need to pay attention to. And Elon Musk, guys, it's not even a question. He is going to impact Donald Trump and the White House. Why do you think they're buddies, right? Typically, people are actually not usually friends unless they have a joint benefit to each other, okay? Even you and your friend, you probably help each other, whether it's laughing or money or whatever. When two people come together, it's for a reason. And politics is for money. Politics is straight up money. I also actually think Democrats, Republicans, same side. They're just making money on us, right? Really clear. So why is Elon Musk becoming buddy with Trump? Well, the reason is, can you guess it? It's money. All right, real simple, real straightforward. Elon Musk could influence Trump to maintain or enhance policies that support EVs, such as infrastructure investments. Guys, as an example, that's EV charging networks. That's a really big deal, because I have a friend who has a Tesla and he doesn't really enjoy driving long distance because you have to plan ahead. So when there's more charging networks, when they're better cost, better price, win, 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 win across the consumer and Tesla as a company. That's a really big deal, guys. I'm telling you, that's going to be a really big thing. It's going to streamline. I think if Trump streamlines regulations more, specifically for autonomous driving, that's going to be a game changer. That's going to be a complete game changer, because autonomous driving, I can't even say this is an opinion. It's just basically a fact. The price to earnings multiple on autonomous driving, since it's like a software revenue stream, is going to be way more valuable than the core car business. When Tesla sells a car, okay, that justifies one multiple. But the reason why they are going to hit a $2 trillion market cap, and this company is going to crush it, is because of AI, autonomous driving, and all of these software trends that we see. Software, guys, goes for multiples that are way higher than traditional businesses. And that's why from the very beginning, Tesla has been valued more than GM and all these legacy automakers, because software has better margins, way better recurring margins, high margins, okay? So that's the first thing, right? Now, the second thing for regulations is trade and tariff negotiations. All right, Musk could leverage his influence to push for favorable trade agreements or reduce tariffs. Okay, reduced tariffs is also going to be a really big deal because that EV tax credit of $7,500 or so is going to go away. So right now, Musk has to be quick. He has to be really quick. The timing has to be impeccable because as these EV tax credits go away, the Tesla vehicle is, in certain states, right? It's not in every state, but it's going to be a less favorable option for the consumer to pick. So if Tesla wants the consumer to still go for Tesla, then they obviously need the pricing to make sense. Economics has to make sense. Okay, economics pretty much has to make sense in everything. Unless you're talking about love, and even still in love, most people still marry for money, and most people are still, relationships are still based on money. So everything is literally based on money. Politics, business, relationships, everything. Right? YouTube. All the YouTubers that copy me and my content, they're doing it for money. Many of them learn as an example, right? Everything's about money, guys. And I need you to understand, you need to plan accordingly and you need to be smart because the smarter you are and the more you understand how the economy actually works and how the individual company works on a micro level. Yeah, there's two different things. There's micro and macro, right? I'm hitting you with a lot of facts right now because I'm literally trying to take your trading level to the next, to absolutely retirement level, right? To 10K a month, 20K a month, etc. for free on this YouTube channel. You don't have to pay for nothing. I'm making my free content better than people's paid content because that's my mission. That's my goal here. So if you appreciate that mission and goal, please go ahead and subscribe. All right, so look, let me stop rambling. Let me get to the point. I'm just trying to give you the full picture. Lowering Tesla's production costs is a really big key for Elon Musk. This man is a businessman. This man is an influencer. This man has a personal brand, something that you guys don't think about all the time. But everyone on YouTube has a personal brand. I'm just being honest with you. That's how it works. Elon Musk is a personal brand. He has his own initiatives. He has his own plan. He has a way of marketing. Elon Musk personally has more followers on Twitter or X, right, than Tesla itself. So he is a personal brand. And the way he's trying to influence the White House is basically to get the production costs of Tesla lower. Why? Because you have more economies of scale. Economies of scale is basically economics 101. Okay, if you didn't go to college for business school and you're an engineer, doctor, dentist, lawyer, that's a majority of my clients, which I understand. That's why you're watching my videos. You're coming to me as I'm an expert in the field, worked at Goldman Sachs, have a degree in this stuff. Economies of scale is basically when a company can produce more vehicles and the more, or produce any good, right? Any good or service. And the more it produces, the lower the cost gets. And the lower the cost gets, the better because they can fulfill that product or service at a lower cost, beating all of the competition. So Tesla wants to do this because if they can lower their cost, they can pass that lower cost on to the end consumer and they can lower the price of Tesla vehicle, price per vehicle or price per service for the autonomous driving or for the insurance that they have or for lots of different products that they have and services that they will have in the future. And if it's cheaper, it's going to make economic sense for the consumer to take action on that, right? It's pretty simple, to be honest. It's really, really simple why he's doing this, right? Now, look, here's a quick clip, 90 seconds. I need you to watch this because I've already mentioned in another video, but I want to explain it to you in a different way. Tom Narayan, right? He is an analyst and he said it perfectly. He said that autonomous driving and new regulations will change the landscape for Tesla and justify the valuation easily, okay? Watch this quick 90-second clip and then I'm going to explain it to you.
Tesla shares, though, popping today on a report that said that the Trump administration is planning to ease federal rules on self-driving vehicles. Now, this follows news on Friday that Trump's team is also reportedly planning to kill the $7,500 tax credit for EV purchases. So joining us now is Tom Narayan of RBC Capital Markets. Tom, it's great to have you on. Let's start right there. What's going to matter more for Tesla and for the vehicle market and any of these AI plays that might be attached to autonomous driving? Is it going to be a different regulatory landscape for autonomous vehicles, or is it going to be taking away that tax credit? What's going to matter more?
Yeah, it's going to be giving less regulatory restrictions on robotaxis, definitely. Federal restrictions was one of the big reasons why GM stopped making its origin purpose-built vehicle, right? That allows you to make a vehicle without pedals and steering wheels. So you need that federal deregulation, if you were to call it, a policy framework in order to allow for that. And that's what the Tesla Cybercab is. Why is that important? It cuts down a lot of costs, right? Currently the competition is, Waymo. You guys talked about that. It has pedals, steering wheels. It's another car company making the vehicle. Right. So if you can make your own vehicle at lower cost, doesn't have steering wheels or pedals, you can bring down the cost. And Tesla's argument is they can actually gobble up market share. And if you look at autonomy and AI, etc., that comes at a much higher multiple. You have $1 trillion+ market cap for Tesla. You know, are you going to get there with an auto business for selling more cars or through AI autonomy, right? So autonomy is the way they can justify that market cap more they can from selling cars.
All right, guys. The last thing that he said there was auto business or AI autonomy. Which do you think is going to be worth more? Of course, AI autonomy, guys. AI autonomy is going to be worth so much more, as I said in the beginning of this video, than just traditional legacy, cars. Okay, Tesla's not a car company. Tesla has been mistaken for a car company. This is an autonomous driving company. This is an AI company. This is a data company. All the things that I've covered on this channel with NVIDIA, Palantir, I'm in Tesla for the same reasons, guys. It's really simple here, right? I'm in this company for the same reason. So look, I think autonomy is going to make a lot of sense, and I think we're going to see $400 per share in early to mid 2025. Now what I want to do is I want to go over a leap option. I've explained to you why, I've explained to you what, I've explained to you everything. Now I'm just going to show you what I'm actually going to do, and I'm going to buy some leap options. Now, real quick, if you're a beginner to leap options, or you probably see it all over the YouTube right now, it's a super popular topic, right? I wonder why. I've been covering leap options for a number of years now. But leap options, let me explain to you three simple ways of how a leap option works, why you want to do it. Number one, guys, is lower capital requirements. Leap options are super powerful because you can basically control the same amount of shares. Okay, when you buy a leap option, buying a call option, you can control the same amount of shares for a lot cheaper of a price. So as I show you, let me actually get into this example right now. Let me go to trade Tesla options, and I'm going to buy the 330. I already said in the beginning I'm going to do the 330 for September. I'm going to go to September expiration because a leap option is something around 9 months, thereabouts. 1 year by definition, probably 1 year or longer. But a leap option is simply a call option that goes out further in terms of date. So don't let anyone confuse you or make it complicated. It's not. All right. Now, Tesla, if you were to buy 100 shares, would be $350 per share, would be $35,000. Now, if you buy a 330 call option, then you're only paying about $8,400 here, okay? And you get the same benefit. So you get to put up about 1/4 of the price, all right? So 1/4 of the price is fantastic. And that's how you put up the lower capital up front. You get the same ownership, and it provides you a very cost-effective way of owning 100 shares. Now, the second thing I want to cover, which is what I've been saying for a long time, guys. Right now, it's really easy to make money. Hand over fist, guys. I'm buying all these companies. I'm making money bicep over tricep, as I say. But, okay, there is going to be a pullback at some point. Don't ask me when. And if someone tells you when there's going to be a pullback, that person's a complete 100% scammer. They're scamming, okay? Nobody knows, not even the smartest people. So look, instead of me trying to predict the future, which I can't do, I've made a lot of money by not predicting the future, but by playing options in a safe way. I'm always trying to use less capital, make more money, and reduce risk. Okay, these are the three things I always tell students as soon as they join my one-on-one coaching. The first thing I say is I ask them their goals and everything, and then we go over the three foundations. Okay, we got time, money, risk. The third one, nobody talks about. Nobody talks about risk management. Nobody talks about managing positions the way I do, because I've actually worked at Goldman Sachs and I have a lot of experience when it comes to risk management, guys. You think I didn't want to blow up my portfolio? You think in my 20s, when I started gaining a bunch of wealth, a 100K, 200K portfolio, you think I didn't want to double down on certain positions and just go to the moon? I did, but I didn't do that, guys. I'm not one of these guys out here that's going to let go of my long-term vision for my short-term wants. I'm going for what I need. I already hit what I need, so I'm just having fun at this point teaching because I want to teach and I enjoy this. This is what I'm very passionate about. But you think I didn't want to do it when I had 100K? When I didn't want to work anymore in corporate? When I didn't want to, when I wanted to have a nicer apartment? When I wanted to travel? You think I didn't want to make it faster? I did. But I would say I did make it pretty quick. I had a year when I had 100K to 700K, and I already went over that story in several of my videos if you watch them. But it's not about that, guys. You want to limit your risk. It's time, money, and risk. All right. So with the leap strategy, you can really reduce your risk because when you're buying a leap, your maximum loss is really limited to the leap option premium that you pay. In this example, it is going to be roughly $8,400. So that is a lot less than having to put up 100 shares, which is going to be around the $35,000 mark. So here it's a lot cheaper and it's a lot more efficient. So that's why I like the limited risk nature of leaps. And now the third thing, as I said, there's three things, is there's just an extended time horizon. So leap can look like shares. It can really look like shares if you buy a long-term Leap, it's really functioning in the same way. If I expand this option right here, this delta is 0.66, so it's not as high as 70 or 75 as I usually say, but it's close enough. You're getting a lot of benefit. If the stock goes up to 400, so basically it'll go up by $50, and this option right here will be $50 times the 66 delta, all right? So that's going to be about $33 higher. $33 higher. I did that math in my head real quick. Really love math back in school. $33 is going to be how much this option would rise. And because that $33 is actually a lot of money on $84. So if Tesla goes up by 50, this option increases by 33. 33, as a portion to 8,400. So 3,300 is what you would make on $8,400. That would be like around 40% return or so. 40% or so return. But, if you do the math, if Tesla goes up by $50, that's really only a 15% return or so on the Tesla stock. So had you had Tesla stock, you would make about 15%. But if you have this Leap option, you're going to make about 40%. So you have almost a 3x leverage factor here with the Leap option. You get almost 3x the same return if you were to use the same capital, or basically you can think about it as you're able to use 1/3 or, about 40% of the capital. So instead of, putting out, 35K, you're only putting out 8,400 to get the same benefit. And if the stock moves up, you get huge benefits. You can close at any time. That's also what I want to point out. You guys do not have to hold until expiration. The reason why I have a Discord community is because obviously it is a case-by-case basis. I can't just blanket statement say, do this with this situation, because the situations vary and the market does pull back and we do get bear markets and we do have changes in volatility and we do have sometimes bad volume or bad bid-ask spread. There's so many things to consider, and I'm trying to educate you guys as much as possible, but simply said, Leap options just make a lot of sense. If I wanted to reduce the cost of a Leap option, I would simply sell call options to reduce the price. You can pick various different expiration days. So I can go for August, I can go for June, I can go for May. One is not better than the other, guys. Option trading is all about choices and preferences. All right, it really depends on your risk appetite. For me, let's just say we're going to go for March 21st. I'll give you this example right here. There's about 115 days out. And this is the time frame I'm going to use because I said I think in Q1 we could reach 400, but it could be a little bit early in Q1. So I'm comfortable enough to go for something like the 390 call option right here. So if I sell this call option, I will collect $3,000 and I can reduce my cost down to only $5,000. Give or take $5,290. So by reducing my cost here to $5,290 or $5,300, that's fantastic because now I get even a bigger leverage effect than I mentioned earlier. For more help with your option trading, feel free to reach out to me in the first link in the description. I do one-on-one coaching. I actually have a few spots available, so it's actually really interesting. I do my Zoom calls with you one-on-one. I go over your portfolio, and I also give you all my trades. So, I won't make this too much of any sales pitch. I don't really care. If you want help, please reach out, and please just keep watching the videos. I got everything for you here that I'm teaching to take you to the next level. And if you want to actually improve at Leap options, I also covered Leap options in this video right here.